Good day, YouTube. This is Jay Money with Falling Forward Financial. Just an update here on Verizon. I've covered them a couple times here on the channel. It used to be a $50, $55 stock, but it's been coming down, as you can see, down over 25% in the past year. I've been buying at the $40 and $41 level. Past 3 months, down over 18%. Here in the past month, down 9.3%. Past week, down 1.8%. And here's a look at today. So it's still going down. I have a feeling it might hit $40. So ticker VZ. If you don't know much about this one, it's telecommunications. It's what I have my cell phone through. Video and data services, just all kinds of different things. So been around since 1983 with a market cap of 169 billion, high today of $40.76 and low of $40.09, and it hit the 52-week low today. 52-week high of 55.51. So if you could buy some shares at 40 and appreciate back up to 55 whenever that happens, plus have the 6.31 dividend yield, that wouldn't be too bad of an investment, safer one. So average volume of 23.99 million and volume here today of 10.58. And here's a look at their analyst ratings at 71% hold, and earnings is pretty much the same every time. I don't think I've ever seen earnings where it's just pretty much, if you put a ruler there, it'd be pretty much straight across. So next is available on October 21st. So here's some dividends that I received. I don't have them here in this account any longer, but had 3 shares, 64 cents per quarter, so $1.92. So you can do the math on how many shares you'd need to get a free share. So I'd say quite a few shares. I've been building my position on Verizon. Have a couple accounts where I have AT&T. One I'm getting close to 100 shares, another one 10 or 20, but been building day by day here, little by little, on some of these since they've been going down. So over here on Verizon, currently showing it as a hold with an upside to $50. Should we be delighted that Verizon Communications return of equity of 24%? Many investors are still learning about the various metrics that can be useful when analyzing a stock. This article is for those who would like to learn about return of equity, ROE. We'll use ROE to examine Verizon. ROE, or return of equity, is a useful tool to assess how effectively a company can generate returns on investment it received from its shareholders. How to calculate return of equity. The formula for return of equity is return of equity equals net profit from continuing operations divided by shareholder equity. So based on the above formula, ROE for Verizon Communications, here we are, is 24%. Equals US 21 billion divided by US 87 billion, based on the trailing 12 months to June 2022. The return is the profit over the last 12 months. One way to conceptualize that is for each $1 of shareholders' capital it has, the company has made 24 cents in profit. Does Verizon Communications have a good return of equity? By comparing the ROE with its industry average, we can get a quick measure of how good it is. The limitation of this approach is that some companies are quite different from others, even within the same industry classification, as is clear from the image below. So the average is 13 in the telecom industry. So the blue is 24.4, the industry is 13.2, so this is a good sign. A high ROE doesn't always indicate high profitability, especially when the firm uses high levels of debt to finance its debt, which may boost its ROE, but the high levels puts the company at risk. Our risk shareholders should have two risks we have identified for Verizon Communications. So here kind of goes over the importance of debt to return equity. So combining Verizon debt and its 24% return on equity uses a high amount of debt to boost returns, as the debt to equity ratio 1.73. There's no doubt the ROE is impressive, but it's worth keeping in mind that the metric could have been lower if the company were to reduce its debt. Conclusion: the ROE is one we can compare its business quality of different companies. In our books, the highest quality companies have high return on equity despite low debt. Of course, Verizon may not be the best stock to buy. I don't know, I've been buying AT&T too. Some people like T-Mobile, so I have T-Mobile, I just haven't bought any of it recently. It hasn't been on the dip like AT&T and Verizon, so I've been building those two positions out. Maybe I'll take a look at T-Mobile at a later time, but Verizon Communications is oversold. The dividend rank formula, dividend channel, ranks a coverage universe of thousands of dividend stocks according to the proprietary formula designed to identify the stocks that combine the two important characteristics: strong fundamentals and a valuation that looks inexpensive. Presently has a stellar rank in the top 10 coverage universe, which suggests among the top 10 interesting ideas that merit further research by investors. Trading on Wednesday, shares of VZ entered into oversold territory, changing hands as low as $40.20 per share. We define the oversold territory using the Relative Strength Index, or RSI. In the case of Verizon Communications, the RSI reading has hit 29.4. By comparison, the universe of dividend stocks covered by dividend channel currently has an average RSI of 44. So from what I can see, Verizon has a lot of good things going for it. So recently annualized dividend of $2.61 a share works out to an annual yield of 6.43 based upon the recent $40.59 share price. So basically you'd need 1920, I'm just doing that off the top of my head, shares to acquire a free share per year, and then you can see how that would just build up. So how Media and T-Mobile got the better of AT&T and Verizon. This was out on the 17th. The truth is that telecom, there are really only three big companies: AT&T, Verizon, and T-Mobile. Aren't what they say they used to be. Some say that has to do with the disastrous forays into the world of media, but is probably more a matter of failed execution and maturation of the business. First, the media math. Remember that within a 2-week period in May of the last year, both AT&T and Verizon jettisoned Warner Media and Yahoo. I still have the Warner shares. I wish I would have sold them right after I acquired them, because I think they're down about 40-50% on those as well, but I still have them. So since May 15, roughly when the announcements were made, Verizon stock down 18%, AT&T down 19%, S&P is only off 4%. Stocks underperformed the market in their 6% plus dividend yields. And moving on here, over here on Reddit. Not much information. Over here on StockTwits, currently at $40.33. Back to a 2011 price. If that's the case, it just don't move much. People get this one for the dividend. Basically, it's a safer one just because it doesn't move that much. But if you're looking for appreciation, this one probably wouldn't be for you. But if you're looking for dividends, I would definitely take a look at this one. And AT&T, not that I give tax, legal, or trading advice, but if you're looking for appreciation, I would look at T-Mobile out of the three. Verizon is trading near $40. It fell behind. T-Mobile did an amazing job grabbing and deploying their 5G. So I'm holding all three of these for a while because they're in 5G, and that's got to take off at some point in time. So over here on MSN Money, currently at $40.01. This is showing a hold with an upside to $51.53. That's all that I have on Verizon. If you have Verizon, go ahead and list that in the comments along with your cost basis, any other information you'd like to share. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money following Ford Financial. Happy trading, happy investing, stay green. Cheers.